Good morning, everyone. Welcome to Admiral Markets. I'm starting this webinar just a few minutes before 9 a.m. GMT, just because anyhow I am impatient to wait to exactly the top of the hour. I think we might as well start anyhow. I'm not sure how many will join at the top of the hour, but anyhow we have to go through this PowerPoint, and of course the webinar should have started, as you know, 1 hour 10 minutes ago, but I was not able to access the platform because the scheduled time was incorrect. The email stated 9 a.m. GMT instead of 7:45, as always, of course. So, also, I was not able to get in fact, so couldn't start the webinar either. So, then the alternative is to start it at the incorrect scheduled time, which is in a few minutes from now. So, we're going to take a look at the Forex trading. Of course, it's going to be a bit shorter because I need to pop out about halfway the webinar. So it's not going to be as long as usual, but we can take a look at the majors and probably a couple of crosses for sure. Let's take a look at this PowerPoint first of all, though. Or let me show you actually, first of all, the calendar. Let's take a look what we have today. We have, no, clicked the wrong button there. Next week, by the way, everything should be back to normal, okay? Because the organizer is back and should be able to put the time back to 7:45 GMT. So I don't expect this problem to be there for the rest of December on Tuesday. Tomorrow, I don't think there was any mistake in the schedule webinar, so tomorrow should be normal, 7:45 a.m. GMT too. This should be the exception, I hope. Let's see. No, the webinar is going to be more like at the mid-half. Let's see, that's 9:30 a.m. GMT. I have to pop out. So it's going to be about 30 minutes, just a bit more than 30 minutes. But we'll cover a lot of things. I'll make sure. Let's see. Manufacturing production, 9:30 a.m. That's in 33 minutes from now. And a lot of USD news, but nothing very high impact. All medium and low impact. Alrighty, we're getting to the starting point of our webinar anyhow, so I can show you these disclaimers, I should say. Please take into account that this webinar may not be suitable for everyone. Oh, you cannot see. Sorry about that. I think I'm showing the wrong screen. Good. Thanks, Bob. There it is. So I was showing this calendar, in fact, pound manufacturing production. Thanks for that heads up. This session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more on that. Also, trading for exchange and other financial markets is high risk and it may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here. And you can always request a copy by going to admiralmarkets.com or admiralmarketsglobal.com and contacting the same appropriate entity. So our focus today, moving averages. We can use moving averages for many things, for defining the trend. They're great for defining the trend, just like trend lines and channels. We can use them for opportunities too. For instance, if price retraces back to a trending environment, for instance, retraces back to a 20 EMA, well, that could be a good discount to step into the trend. We can even use it as a filter. I mean, if you look at a higher time frame and you see 20 EMA coming in, you might, from the top as a bearish EMA, you might skip longs on shorter time frames because you know that resistance is not too far ahead. So you can easily use this for all of these steps, in fact. You can use it as a trigger too. You can say, okay, if price, for instance, crosses back up below the 21 EMA band, the price is going back into the trend, and I will look for shorts, but you might not decide to take a short immediately because that could be step 5. Now for step 5, that's the least interesting for me to actually take setups based on moving averages. I like to use them in many different ways. but not the biggest fan of using them actually for entries. But it's possible. You could wait indeed for an hourly candle close below an EMA and take that as a direct entry signal. So there are a lot of things we can use them. If you are new in this webinar by any chance, let me know. It's quite useful for me to explain maybe some basic things and intermediate things that I've already explained in previous webinars. And it could be good so that I know that some things deserve repetition or explanation because, of course, for you it's the first time. So let me know if you are relatively new in this webinar. So we'll use moving averages as the base for conducting analysis and trying to find the best pairs for today, but some occasional tools, other tools will be added as well, by the way, to gain a better picture of trend and momentum, support and resistance, and patterns like chart and, of course, candlestick patterns. So those three things. Let's start off. I was looking at the pound out. I was looking and curious to see if we can get a reversal or trend continuation. It was kind of at one of those spots where if you look at the daily, it was heading towards targets by putting a fib on here and here. You can see the minus 272 target close by. So I was waiting for that little more push to get to that minus 272, which is a high likelihood of a bouncing spot, especially if you see a zigzag so impulsively like this. There's a good chance. If it's a more slower zigzag, if it moves slower, then the chances are a bit different because of the fact that price could move slowly and get all of a sudden an impulse. Let me draw you on a chart what I mean, the difference. Oh, 1 second, folks. All right. Should it be working now? Yes. What I mean is like this. If it moves slowly here, like that, then it's kind of like, it could be a rising wedge, and it therefore could be still a signal. But especially if it's just like a channel, then it's not as good as I think as if it gets a last push right to the target. In any case, minus 2.7, minus 6.18 targets are always levels that reversals start, or at least bigger retracements could start. So keeping an eye on those makes sense. But you don't always get a reaction to that level. Sometimes price does push through it, so it's not a 100% guarantee. Nothing is. Therefore, it's always good to keep an eye on confluence and any confirmations of price reacting in that zone. Unfortunately, here we missed it. But zooming into the hourly, we see other things too. At that level, monthly R2, daily R3, and close to the H5, in fact. So I was looking for the reaction there, but the price actually didn't make it all the way up there. It stopped at about 190, which is a psychological round level, so maybe that's why it didn't make it up there. It could make still one more push. I'm not a big fan of trading it after so close to the H5. And as you can see, we're getting a pretty big impulse. Plus, we have the pound news. If it were not the fact that the H5 or pound news, I would say, okay, maybe one more push up. But in this case, I'm skipping it. But if it does make the push up to that 190.80, I'm going to keep a close eye for reversals to see if we can get maybe 200 pips as a retracement trade. Nothing too fancy because the minus 618 is the primary target in all cases, so there's always the lingering danger that price could push up higher. Now, regarding the moving averages, everything is bullish. So if you're only looking at moving averages, we would need price action to move back to the 21 band as an opportunity for a bounce, as you can see. So that will have to retrace quite a while before we get there. So let's take a look at other pairs. I just started the pound out because I was looking at it before our session started and just wanted to finish off that thought. Alrighty, let's take a look at the euro dollar. Let me put a new template here. There we go. Euro dollar is retracing back, is making a retracement to the upside, whereas the trend is down. Why is the trend down? Because the moving averages are still bearishly aligned. 21 band is below the 89. Price is trying to push above the 21 band, but that isn't always the case for a retracement or reversal. As you can see here, in other cases, price here, 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 just went back to the band for further downside. So that could be here too. So I'll keep an eye on that, the fact that the trend is down and this is a retracement for perhaps more downside. So with that in mind, that's how we can use the moving averages. We can see that still bearish in on the euro dollar, in my opinion at least. Now, where would that change? Looking at candlestick formations, it would, at minimum, price would have to break above last week's high. Otherwise, anything below last week's high, I don't see any reason not to be bearish, very simply put. You can see the moving averages here too, the 21 and 34 EMA growing away from each other here. That means that price is pulling the 21 away from the 34 EMA. So that means there's ever more bearish momentum. Same thing on the daily chart. If you look at the daily chart here too, moving averages clearly confirm the downtrend. And the 4-hour too. So if you would like to use the moving averages in another reason or other way, I should say, than for trend purposes, then on a 4-hour chart we can wait for price to close below the 21 band here. The 21 band is at 123. And a 4-hour close below it would signal the opportunity for a moving average short. The short doesn't have to be there. It could be there. It could be the trigger. Once price does it, then we could zoom in or take a look at a retracement on this time frame to enter at a bit better price, for instance. So in this case, though, that would be one scenario. If you don't want to use the moving averages for trigger purposes and only as trend, then we can use other tools to define what levels could be interesting. In fact, we have a weekly pivot point right here. And this is actually an even more interesting one than the pound odd, because although the price is moving up, it is counter-trend movement at this point. And I think, in my opinion, looking at this analysis, that a short is interesting right at this daily weekly pivot point and daily R1. Plus we have an H4 as well. If we add a fib on the very first reversal segment here, on the swing, we also had a minus 272 target. The only thing that I want to caution for is the fact that price could move up to the minus 618 target as well. So a stop loss, a tight stop loss wouldn't do, in my opinion. One could do it, but it's very risky and high chance, well not high chance, but a decent chance that it will get stopped out. So what is a good stop loss? An entry could be here, right now. An entry could also be partly here, or both could be done as long as the risk doesn't total more than you usually would risk on this trade, by splitting the trade in two parts. Depends really how much a trader likes a setup, really. If that's the good thing. If you don't like a setup, sometimes you can demand a better price, and if you don't get it, you don't care. That's always a good attitude, by the way. Think about it like going to the market, an old-fashioned market. I mean, real market where people are standing in front of you, and you maybe want a particular good, but you don't need it. You don't really want it, but it wouldn't hurt. So you have more negotiation power, really, right? Because you can offer something, and you're not emotionally attached if the seller agrees or not. I mean, anyone who is really interested in shorting it could have been taking it earlier this morning around here. Now we just got, compared to those sellers, we just got a nice, cool 55 pip discount compared to that level. And perhaps that trader got stopped out if they used a tight stop loss above the previous top. Right? I didn't short it because I was really looking at the potential for a zigzag. Why? Because this was impulse. And I was looking for a short around here. In fact, let me think for a second. I think I had 123.70 as a pending order, but price missed that pending order. All right, so had to take it a bit lower because of that. Sometimes you just miss, you have a pending order and just misses it. All right, with a bit of a shooting star here. So there's some kind of reaction to it. Might not be enough for an ultimate downtrend, but it could be enough for some reaction. It could, of course, still go to the minus 618. So I put my stop loss, that's the next step, above 124.25. Why above 25? Because first of all, the target is at 124.05, the minus 618 target. So I wanted to go above the next quarter. So I went to 30. So that 25 resistance still helps me. Especially for your dollar, quarters and 3/4 are good. So that's the reason. So it's a bit spacious, yes, but my target is pretty low at 122.20, which is the monthly S2. It is also the S5, as you can see. And, well, there's a daily S3, S2, and a weekly S1, also not too far. So I think the 122.30 makes sense, because here, too, I'm going above the quarter, above the 22.25. So it's about originally 140, now brought down to about 125, versus about a 60 risk. It's about a 2-to-1 trade. If you don't like the short here, and if you don't like this small shooting star, no problem to wait and see if price pushes higher to this. And you get even a better reward to risk, obviously, from that point of view. Because then the risk is 25, 30 pips, but the targets could still be about 170. Or you can move up the target, make it less pips, make the target 100 instead of 170. Get still a great R2R, but have the potential to exit the trade earlier than waiting for a full 170. Obviously, you have to wait less in time for a price to hit 100 than 170 pips, most of the time. And therefore, there's also a slightly higher win percentage chance that that trade will work out compared to 170. It really depends what type of trader you prefer to be. So, yeah, I mean, as always, the decision is one, oh, this is my thoughts. Anywhere in here is a good short. It really doesn't matter, I think. A few pips lower or higher, it really doesn't. I mean, of course, the R2R is diminishing as the price gets lower, but it's not that drastic as yet. But I don't know, if it gets too low, I mean, then it makes sense to wait for a bounce. I mean, if it gets down to this moving averages, I would rather wait for the bounce and take the short upon the pullback again, right? Or if you miss the pullback, then take it on the next break of this trend line, for instance. Those would be other potential shorts, still based on the same analysis, but at later spots after more confirmation. So this is how we can still, trade the same setup, but at various points, depending on how comfortable you feel at what point, and what suits your psychology perhaps a bit more. If you see what I mean. Alrighty. Pound dollar. If you have any questions, please don't hesitate to ask. But I mean, that's probably all I have to mention. Anyhow, I'm spending a bit too much time on the euro dollar than I actually planned to. Time is flying. Let's take a look at the pound. Kind of the same thing, zigzag here. Preferred price to get to 157, to be honest. Price went up to 156.94, but we also have the news event. I was thinking this morning, 157, 157.40 here, good resistance zones for a downturn again, just like the euro dollar. So that could be the same. It's basically the same scenario as the euro dollar. Why? Because if you look at the weekly chart, you see the 21 is growing away from the 34. That means more impulse. When the 21 pulls away from the 34 EMA, then that means impulse. Last week was a bearish candle, closed right at the low, big wick. So this could be just a retracement. So this is probably just a zigzag for downside. Another way would be to look for some kind of candlestick pattern here. You see, sometimes that's when you see shooting stars like this, they don't work out because of the zigzag pattern. At the very max, I would expect price to go to the minus 618 if that's zigzag. Let's see. Well, depending on how we fib it, the minus 618 could be at the 157. Like that. If we fib it like this, then the minus 272 could be the turning spot. Where's the minus 618? It's all the way up at 157.60. But, one second. I don't think it will get up that high because last week's high is around, it's actually the same level. So yeah, any stop loss that would want to be on the safer side would have to be above 157.60 in fact. We'd have to go to, 157.70 I guess, 157.80, which is quite spacious, but let's take a look at the target. $154.30 would justify enough potential to the downside for shorts. So short environment, question is where do we turn? News event coming soon, so you might want to wait for that. And safest stop loss here, but if we do see a good candlestick on the 4-hour, good bearish candlestick pattern, a tighter stop loss, 15 pips above the candle high, could be a way to reduce that size of stop loss, still with a decent chance probability of a trade working out and not putting it maybe not too tight of a stop loss. Dollar yen is also still bullish in my opinion, but it is making a pretty hefty drop here. Finally, it didn't happen at 120. It did happen at 121.75 apparently, or 121.80. In my opinion, there's still some upside left, but it is making a pretty sturdy retracement here. So the impulse momentum is not so pleasant for those looking for longs. Those that caught shorts did a great job, and yeah, you might want to exit at this spot. If you're a bit more patient, you can wait to the minus 618 target and the 61.8 fib confluence and daily S2, which could be, by the way, a pretty interesting bouncing level as well, not only a target. So anywhere around this. Now that was already a lot further than I expected. So I, at max, would have expected this week 120.30 or 120, but it did break through to 120. So I'm a bit cautious now because it's definitely moved a bit more bearish than I expected it would. However, if we set aside the fact that it broke back below 120, it is still, however we look at it, still a very bullish candle last week with the close near the high, and all we did basically was retrace last week's candle. So if we take the norm of the last few weeks as a pattern, we had 1, 2, 3, 4, 5, 6, 7 candles in a row. No matter what kind of bearishness we saw in those weeks, it still ended up bullish. Could this be number 8 and be the same as the previous 7? In my opinion, yes. So despite that, it still looks in a bouncing zone. And if we then look for spots where we could see a bounce, okay, it hasn't bounced at the spots one might think it would. Doesn't mean it cannot bounce here at 119.17 still, because that's still way above the weekly low. So that's what level I'll be waiting for, not this bounce. Still too early in my opinion. I would only look for upside if price really pushes above the daily pivot point. I don't expect it today though. It looks too bearish today. But if it does push one more time down to about this level, 119, 119.20, it could be a good bouncing spot. One thing we want to be careful of is the elections on Sunday. Anais is talking about the fact that yen strengthened in Asia indeed, and it was indeed a brisk fall, definitely. Yeah. Now that could be partly because of the elections that are indeed looming around the corner, with, as far as I've read at least, a re-election of the current Prime Minister Abe. We could expect economics to continue and yen probably to continue weakening. If he doesn't get elected, which according to the polls does not seem likely at the moment, then perhaps consolidation or more yen strength. But that doesn't seem likely as far as I've seen from other comments at least a few days ago. So that's something to keep in mind though. Aussie made a good fall yesterday. I would be cautious for the moment on the Aussie. It isn't a bearish downtrend too, but it looks ripe more for kind of a zigzag correction at this point. Hit the L5 too already. So depending on how this 4-hour candlestick pattern goes, we could maybe see some kind of retracement here, in fact. Got divergence between the bottoms too. Let's see how price, if price can make a close above the daily pivot point. If it does, and then starts to hook back, it could be a reversal long upon the hook back for a target at the daily S2 with a stop loss below the bottom as a zigzag pattern. Because this is more of an impulse already, as we can see. This is more corrective, 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 this is corrective. So it's a bit different. I mean, this is bearish, but the current price action is not looking too good for shorts at the moment. And if anything, it could set up for a reversal trade back up for a small reversal trade there, which afterwards could still be a good short for more downside, by the way. If you see what I mean. If not, let me know. Pound yen, yeah, good retracement too. If you use fibs, you can see moving averages clearly was above the moving averages for a long time. Now retracing back to them, which could be an opportunity. As you can see, a very clean bounce off the minus 618 target. One of my favorite ways to use fibs, correction and looking for zigzags. Let me use the standard moving averages on this chart. Bouncing off the L5, good confluence, daily 2, not too far from the weekly pivot point. Now there is kind of a difference in the sense that the drop here was pretty deep compared to these retracements, similar to something like here, in fact. So although there is a bouncing spot, it could just be still a bouncing spot for some further consolidation here. And it's a pound news event, so I'll be cautious with this one for the moment. Just wanted to show how the target could act as a bouncing spot. For the moment, though, prices moving counter trend, have to be cautious how far that can last. I really like the majors the most, the euro dollar, pound dollar at the moment. Excuse me, besides those, there's nothing really particular on my mind except the pound odd reversal higher that interests me a ton. So in that regard, a shorter webinar today I don't think will be a disaster. Let's see, Arn, I can send that, no problem. Just send me an email, please, so that I have a reminder, okay? Thank you so much. There it is in the chat. You'll see my email, okay? Let's see. Gold, we can take a look at that, and your cat. I don't trade gold, just as a warning, so this is just analysis for me. But I still think it's a bit funky. Went up to the minus 618 target, fell, and then closed and reversed. Seems like it doesn't really know what it wants to do. It's still more closer to resistance within the downtrend, in my opinion. But this little momentum here is kind of ruining the landscape. We hit the minus 272 target, then the minus 618 target, then the 1000 target. So maybe this is the turning spot. If it is, I guess we'll have to break through support. A bull flag, yeah, that's a very good point, in fact. I didn't see it. It's possible. You could put these lines on as well, besides this one. And indeed, on this hourly, it becomes very clear indeed. A nice impulse plus bull flag. Good point. And it's always good to have different pairs of eyes because that's something that I unconsciously ignored, apparently. And it's possible. You could have that breakout to the upside. The only thing what I don't like about that breakout is the daily downtrend, in fact. But, you know, it's really, in fact, price is already kind of struggling above those 21 EMAs. So it could be a breakout indeed, up to retest this top, for instance. That would be the alternative. So two things: I break out here or break out here, in fact. Let's take a look at EuroCAD. EuroCAD, I was talking about last week, was the retracement of 2 weeks ago candle. We did retest the low, pretty low, and are getting a bit of a bounce off that low. So depending on where you took it off of that weekly candle 2 weeks ago, you might be in a long or not. If you did, stop loss below the weekly low was the safest, and indeed is proving to be true. Sorry, actually here's the weekly low, excuse me. Waiting for candlestick patterns, we can put a fib to see at what patterns we get it. Now this was a reversal trade, so this had nothing really to do with moving averages at that point. And you can see a wick at the 78.6. There was really no stop at the 50 or 61.8, so those were not really any discussions needed whether a trade setup was merited there or not. Anyone who took the trade here is up some pips, and depending on how you want to exit, you could have various strategies. You could still be in the trade waiting for this big target, or you could target a more conservative counter trend 78.6 pip that just got hit, or 61.8. Looking at the moving averages is actually still slightly bearish, but there is divergence between these bottoms. So from the moving average point of view, I don't think there's something interesting at the moment. From a daily point of view, though, we could be close to breaking out here. In that regard, but I would like to see a momentum followed by a pullback and then a bounce here. So I know it's quite I'm a demanding purchaser in this with this pair. So that is not always a bad thing. And as I said, sometimes it gives you the liberty and freedom to demand a good price before taking a trade. Yes, the pound news is a few seconds now. Actually just already released, I guess. And we don't have webinars indeed around this time usually, so let's take a look. Doesn't happen too often. Let's take a look at how price is reacting. Let's grab the pound quickly. Downside. $16 pip drop, a few seconds so far. So pound news probably less than expected. Let's take a look. No figure as yet. Well, let's take a look later on then. No problem. Must be, probably negative. And we're getting the bearish reaction as expected. Euro dollar is not moving that much because it's pound news, so Alrighty. So for me, pound dollar short, if not in the short already, one could take a look at this 4-hour candle for a confirmation of the wick. There's something like this. A short could be taken immediately, or upon the retracement of the wick, or upon the break below the low. Depends which one you like more. You can even do a mixture as long as the risk doesn't exceed what you originally planned to risk. So that's one way of tackling the pound. The euro dollar, same story, either entry here or 4-hour candlestick as well. By the way, you can use the same technique, or waiting for the minus 618 to get hit. Those two seem the best to me for today. The dollar yen, but lower, looks interesting, but need to wait a bit. And those two are the most interesting, I think. Aussie could be a retracement reversal setup. And what else? I think pound out could be a reversal rate. That's about it, I guess. That's a quick summary. Let's see, Simon, good to have you in the webinar. Yes, the moving averages. Well, I was showing you two different things, I'll tell you. Let me clean this chart up because otherwise it just gets so much info here. One set of moving averages I have on all time frames except the weekly and monthly. Those are basically two moving averages, in fact. This is an 89 EMA close for kind of the intermediate trend. And then there's a 21 EMA close, high, and low. And the effect of that is that you have kind of a band. Now that might seem a bit visually kind of busy, but the advantage is that you kind of get a footprint of a rough zone where price is support or resistance instead of one area. And I think a zone is in fact more accurate than a rough point, exact point, because that's how I think the market is more not that precise in that regard. It's not like I think that the 21 EMA close is exactly where price will or should stop. So I think a zone is more accurate in that regard. So I use that for support and resistance. Now, that's what I use, 21 and 89. But I used to use 144 and 34. Those are also pretty good. 34, again, the same band as well. On a weekly chart, I like to use or you can use it on other time frames too if you like. It depends on you, but I have it on the weekly. I use indeed 21, 34, and the 89 EMA close. I don't think you really need the 89 on the weekly, but the 21 and 34 are interesting combination because they give momentum. You can do that on the daily too as well, or even the 4-hour, depends. But the advantage of having the 21 and 34 instead of the 21 and 89 or the 34 and 144 is the fact that you see when the 21 is pulling away from the 34 and therefore whether momentum itself is increasing or not instead of using it as a trend or support or resistance. So to recap, 21 and 34 separately speaking is kind of like support and resistance. The 89 is kind of like the bigger trend. And the combination of using a 21 and 34 or using lower ones like a 8 and 13, for instance, 2 or 13 and 21 is kind of like for momentum. Momentum, trend, support and resistance. All right, so I hope that explains the moving averages I use here for my own trading and the ones we used for this webinar. Right, so yeah, I tried to use the moving averages as much as I could because it was a moving average webinar, but sometimes it really depends. Sometimes the currency doesn't lean itself for using them because there's no clear trend or moving averages are going sideways, but it's always good to take a look at them, I think. Very useful for these three things specifically. You can also, of course, use it because if price is very far from the moving average, you kind of use it as a reversal to the mean effect and use them as targets as well, by the way. That's another method. So tomorrow we have strategy webinar. It should be around 7:45 a.m. GMT time, as usual this time. So I hope to see you then. I will have to wrap it up today, unfortunately, but tomorrow we'll have a bit of a longer webinar as usual. So wish you happy trading, good trading and happy hunting, and see y'all soon. Cheers.